quarter. So looking at what happened when we did have the price fluctuation, you can see that it will it's all operations related, and that's something that's still very true for ethylene, but there's also some other factors that come into play. So on the next slide, you'll see what was going on in that early February time frame, and I'm sure you'll all get copies of this so you can read it for yourselves. But we had a few outages coming into February. February in Texas, sometimes you see freezing temperatures, so it's always a little bit dicey if there's going to be some unplanned outages. And there we had them, starting February 4th, the 5th. Then we have some restarts, and that the prices react to that. Then we have another plant shut. Another plant starts its planned maintenance. So we had some different factors that would affect specific days of trading. You know, oh, a plant shut down. I'm going to buy 49 cents. That sounds like a great idea. Oh, a plant restarted. I'm going to sell 47. That sounds like a good idea. And like I say, at the time, this was very exciting to see trades happening, you know, throughout the day, every day, different values changing. And you'll see the types of trades on the next slide that we that we saw during that entire month. So there we go. We have news-driven volatility, and what I've done in red there is I've just highlighted the trades that weren't for the immediate future. So during the month, and like I say, you know, if you look back at 2003, you couldn't imagine that you'd have this many trades in a single month. So here we have all these trades. Most of them are February. After about the 15th, you get mostly into March. A couple of people went out there and got some May and April, but that was really about it. We have a high-low range of 2-cent spreads. And then we'll see on the next slide something that might be more familiar to us. That's what this year looks like. So here we go. Yeah, look at this. This is where we're at as of last week, and we're still in that zone. We're back up to 56 this morning, but basically we were reaching some historic high levels in the middle of September, and immediately boom down, a little tick up, boom down, and that can be a little bit disconcerting. It is still a lot of it in the front is a reaction to news, but we also have some other factors that go on, as you'll see in the next slide. So coming into the month, we do have, again, this is our front month reaction. We do have that volatility that's, we've got a stage set. We've got several outages that seem like, you know, they're ongoing, and there wasn't much of an idea of when they were going to restart, or in the case of some of them, they say we are not going to restart until later this year. So you knew you wouldn't have that production in the market. Meanwhile, you're watching a couple of wild cards, who's increasing their rates, who's restarting, how's that restart doing. Then in September 8th, you have an outage here, then you have a scheduled turnaround, you have an unexpected outage at the beginning of October, you have a little brief operational issue, so you have little blips along the way. But basically, you know, again, primarily driven in the front months by this. But you'll see on the next slide, there's a little bit more behind this that you didn't see back in 2008. So these are all the different types of trades that were occurring in a one-week period. So where we were looking at February 2008 just a few minutes ago, and you're like, wow, look at that, 30-something trades. You had that practically going on just between the 8th and the 10th. The same kinds of trades, a lot in the front, people, you know, picking up product and a little bit of a supply concern situation. But you also have people trading out into May of 2015, first quarter, fourth quarter of 2015, you have a lot of people doing spread trading where they will buy or sell one month and then either give or receive in the other month, and they put a price on that now. So the spread trading has become very popular. You'll see that they're sometimes very specific, January versus April of 2015. And sometimes that backs right up into your front month markets. If you have November and January spreads trading, and then you have a first half or a first quarter spread trading, and you have almost nothing trading in your September or October markets, sometimes that value, that relative value, can be affected by what is happening in those further out deferred markets. And then on the next slide, we'll talk more about that. So again, during that time frame of these trades, you had 9 of them that were spread trades, and you have this high-low trading range, and this is, considerably volatile of nearly 69 cents up to 73, back and down. You have a lot of multiple trades in a single day, and like I was saying, the forward pricing and then the spreads back to the prompt pricing, that can also give you a little bit of volatility. Certainly something that is relatively new to the ethylene market as it evolves. Then on the next slide, we can go more into what happens then at the end of the day when all is said and done. We have all these trades that have occurred since the morning through to the afternoon, and it gets a little bit intense in the afternoon as people are marking their books for the close of the day. We over at the PetroChem Wire, we mark values along the forward curve, and this was the actual forward curve that we sent in September 9th, and that's our closing value for September. And you see what I've got there goes through the end of 2015, but we mark out for 24 months, and you can see the different values of the strips there. The calendar 2015 has a very specific value, your fourth quarter, your third quarter, and all the way back to your current month. We post a new one every day, and that's been going on since 2009. You'll see on the next slide, we also have a lot more volume. And you see in 2008, that was pretty great. That growth between 2007 and 2008 was significant. And now look at it, and it's more and more every day. So now we have an average of more than twice the volumes that we would see trade in a given month are trading now. And like I say, that's multiplying exponentially each month. And then we'll see on the next slide. Marking to market is really what this is, what a lot of this liquidity has come from, is when you have people that are participating in the market that are trading physical volumes that, of course, are responsible for receiving and delivering them, but also trading paper markets, which, of course, are just the financial instruments. They can help demonstrate value, too, especially in a day where maybe nothing is particularly active in the physical markets. You might have some people trading January and February paper markets. That's showing an indicator of value for sure. The physical markets always show, in my personal opinion, they always show the real demonstrated value of delivered product. But again, we have a lot of competing interests now over what is essentially a small market that has that trades at specific price points multiple times during a day, and then with the NYMEX postings each evening, that's where all your accounts are reconciled against, and that's where you're marking to market and judging the value of your positions day to day. So with more and more competing interests, it's no longer a market that's a producer selling to a consumer who is then taking it and selling downstream and so on and so forth. You have different people that are just monitoring the financial value of their positions, getting in and out of them, not particularly interested to make anything with the ethylene except money. And that's, which I think is wonderful in the evolution of the market. But the competing interests can really make the reaction to not just news, but speculation. There are instances, of course, when we're talking about the future, and you might hear a rumor in the marketplace that somebody is going to have a shutdown next month, so maybe next month gets very popular. Well, we don't know for sure until the next month happens, but speculative behavior is something that, again, maybe 5 years ago, certainly 10 years ago, if there was a rumor so-and-so might take an outage in January, and it's only October, people say, okay, so noted. Now they go trade January, and that's a much different dynamic than we've seen before. So again, with this volatility that, we can see up and down 2 to 3 cents a pound in a day, which is, I think, fairly volatile for an ethylene market, especially when you're dealing in dollars per pound. How can you best cope with volatility? How can you keep a market from getting really funny and out of whack? And that happens in some emerging markets where suddenly it just seems as though they become a little bit too volatile, and nonsensical, and they drive people away from it. So how do you keep that from happening in an emerging market? You'll see on the next slide what my opinion is to have a consistent approach to the market. We call that methodology. So every day we try our best to apply the same principles when we are trying to demonstrate and determine, basically mark the closing price each day, which we send off to the NYMEX to settle its contracts against. So again, you know, we have a whole specific list of things, and I can always talk about this afterwards. I think we're taking questions at the end, but you know, things like what's the last traded value? That's probably closer to the real value than what was trading this morning, because now the price has changed. If something is trading at a particular level and then bids go through the roof and there are no offers, maybe that indicates nobody's got any products, so the value might be higher than the last trade. How do you cope with things like volumes? Does something that has a huge volume have a greater impact than something that has a very small volume? How about something that is a physical delivery deal versus a paper deal? A small volume paper deal, a big volume physical deal. What is the better demonstration of value? How to prioritize your information, and really, at the end of the day, you'll see on the next slide what we're about here, you know, at the PetroChem Wire, but also working with the market to mitigate what I'm calling unnecessary volatility, and trying to apply fairness. You know, just like with the Genscape systems, there is a certain amount of technology and mathematics that can determine all of this stuff, but to just leave it to robots doesn't really, you leave out that common sense aspect, you leave out what I call more art than science, and what's the determination of fair value. And doing this on a day-to-day exercise is really interesting, and it's something that we all really enjoy at the PetroChem Wire, but it's been great to see how these markets have been evolving. Part of that journey is the volatility that we have been seeing, and for those that might be standing a little bit away from the market, just watching these prices go all over, saying, what is this? That's the part that we're trying to help explain, and we're trying to answer any questions. So, like we say, news will never be predictable, but we can do what we can to mitigate this volatility through consistent methodology. And that's it from me. I think the next slide might say questions. No, it doesn't. Okay, great. So yeah, I'll take your questions at the end if you have any, specifically about volatility and about pricing mechanisms and how we attempt to demonstrate fair value every day through our report. So with that, I'll hand it back to you, Suzanne.
Thanks, Kathy. Yeah, just to mention about questions. So you'll see there's a questions box on that right sidebar on your screen. So if you have any questions, we'll be addressing those at the very end. Feel free to type any questions you have. Once I complete and Bob complete our presentations, we'll go through and have time for a question and answer session for all of us. So with that, my turn to present. I'll be going into a bit about the relevance of real-time monitoring and the technology we use at Genscape to capture and bring transparency to real-time fundamentals. And in this case, it's all about ethylene cracker operations, what kind of data we gather and then distribute to our customers around ethylene cracker operations, and what it means in terms of market news and overall transparency and fundamentals and market efficiency. So operational news in ethylene markets, I'll talk a bit about the traditional methods by which market participants receive news, and really how proprietary monitoring has changed the definition of what operational news means. And I'll review a bit, as Kathy mentioned before, what I call the summer of ethylene, where there's a number of operational upsets happening with the background of lengthy planned maintenance shutdowns and the impact that ethylene cracker monitoring had on providing quality data and accurate data to the market, as well as what that means from just a broad fundamentals perspective. A few examples I'll go into about the idea of quantitative versus qualitative news. One here is the an issue with a Dow LHC 8, the accuracy of information that was available in the market at the time, and how we can monitor the progress of ethylene cracker expansions. So with that, the good old days. So if you're a trader, marketer, broker, analyst, it's clear that operational news is critical to understand market fundamentals and price drivers. Any news around events that impact supply or demand ultimately move price. And being in the know and having that information first, that translates to competitive advantage, to get ahead of the market with those kind of operational upsets, changing the fundamental picture and driving price higher or lower. Operational news, it's relied on either delayed data or word-of-mouth sourcing. In the case of delayed data, the example I give here is Texas Commission on Environmental Quality, TCEQ. When there is an upset that involves emissions at a ethylene cracker or refinery, the company is required to report this as an air emission event. These aren't timely, but there is a 24-hour deadline. So it's entirely possible that it does happen frequently where an upset occurs, but there is no TCEQ filing until half a day or a day even after the event took place. IIR provides alerts through their network of talking with the construction crews and maintenance crews that might be coming in for planned maintenance or to repair in the event of an unplanned shutdown. That's sourcing, of course, through folks that are not working at the facility directly, but would be contacted if they need to come in and do some repairs. And another word-of-mouth source, the industry has relied on for some time, are those real-time stories that are based on daily market engagement by the price reporting agencies like Platts and ISIS. And that delayed information, TCEQ, it's generally accurate, but it's not time sensitive to be valuable in an active market, especially a market now like ethylene. Ethylene has become a spot market where you're seeing increased liquidity and you're seeing volatility. And in a type of market like that, time-sensitive news and operational information is critical. You have the qualitative news, which is the idea of IR and those real-time stories from the price reporting agencies. They can definitely be timely, but they lack inherent accuracy and verifiability. In the case of a story on what's going on at a particular cracker from Platts or ISIS, this could be sourced from various folks in the market, but no one's on the ground really seeing what's going on. In the case of IR alerts as well, similar, you're contacting folks, but it's not inherently accurate. It's a qualitative piece of information. So we enter the summer of 2014, the summer of ethylene, and there were a combination of planned spring maintenance that was extended into the summer. That heavy spring maintenance season tightened inventory, so already you were dealing with a market that was net short. Equistar LaPorte with their furnace expansion, that restart was delayed. That led to a force majeure this summer. Williams Geismar is maybe coming up soon, but has been down for a long period of time. DuPont Orange also had a unexpectedly long planned maintenance this spring as well. Underlying all of that, a strong ethylene market and a cheap feedstock market that support ethylene production margins, which spur any producer to run their plants at the highest operating rates possible to capture the profitability there. Of course, when you run any kind of facility, be a refiner, an ethylene cracker at high rates, that brings the risk of operational upsets taking place. So from June through August, we had 10 operational incidents across Gulf Coast steam crackers. And the delays, while these operations were going on, the delays in restarting LaPorte and Geismar continued into the summer. So you had that intersection of low inventories and this unplanned maintenance at an unprecedented level, and this drove prices across the Gulf Coast higher and exacerbated spot price volatility. So in a market environment such as this, where the market is tight, prices are rising, unplanned events seem to be happening once a day, there's significant price sensitivity to operational news. So any rumor, any word of something going down, be it for planned maintenance or an operational upset, can create volatility. Kathy mentioned unnecessary volatility, and that's what we were seeing this summer was reaction to any bit of news of an operational issue, even if that piece of news was not verified. So just a price chart here, just showing the price volatility started out early in the summer, around 55 cents a pound, and at one point in the sort of the pinnacle of operational upsets and continued plant maintenance persisting, we touched above 75 cents a pound. And since then, prices have recovered. Once we start to see a few plants come back online. We've even had a few upsets here in the last few weeks. You had Baytown, which came back up, is running at reduced rates currently. It's been an issue at Norco lately. Formosa Olefins 1 is down right now. Beaumont was down for a brief planned maintenance blip. Of course, Geismar is still down. Even with those going on, because the sort of slew of those lengthy planned maintenance programs like from LaPorte and the other unplanned maintenance issues that came up have subsided a little bit. Inventories have grown. We've seen the price of ethylene decline back and decline back very quickly given how high it was in September. So quantitative fundamental news. Quantitative fundamental news in this case we're talking about is our proprietary monitoring. What we do at Genscape is we install cameras, infrared cameras, on ethylene crackers across North America. And what this IR imagery can capture is the furnace stack and the flare at an ethylene cracker. What that can tell us is which furnaces are on and off. It can indicate when flaring is taking place and significant flaring, and can indicate that there's an operational issue going on. And also any venting, any shutdowns of furnace stacks that are taking place on a wide basis when units begin to restart. So there's inherent accuracy in that because the picture is there. It's not word of mouth saying that that Shell Norco GO1 is flaring and there's some furnaces down. We can look at the picture of Norco GO1 and we can see that there are furnaces down and there is flaring clearly. Also on the proprietary monitoring side, our cameras capture images of the crackers we monitor every 5 minutes. So we are able to review those images and get the word out to our subscribers there's an issue going on quickly and ahead typically of those qualitative sources that the industry has relied on for operational news like market reporting agency stories, alerts, and TCEQ filings. What's different about this quantitative fundamental news as opposed to traditional sources is that this is news on demand, where you as a trader or a marketer would wait for a news story to come out to find out what was going on. You can actually go to our dashboard and look at a current infrared image of any of the crackers that we cover and even be able to view what's happened there in the last 4 hours. So this monitoring, it allows for market participants to seek out fundamental information on their own and take the initiative. And there's granularity here. And as the ethylene market has evolved, like Kathy said, even the forward market where folks, would hear an outage was happening in January and it was October would go, so what? That's changed here in this sense. You might hear that a cracker is down. That may have been the case, let's say, 6 years ago, and people go, okay. But with this quantitative fundamental news, you can see exactly what's going on with these images. How many furnace stacks are down? How large is the flare? How long is the flare persistent? Are the furnace stacks just slightly lighter, or darker, which means that they're not running at a higher temperature, or are they completely off? If we're seeing a restart, how many furnace stacks have come back on? If there's an issue going on, is there venting going on with the furnace stack? So you get into these details around operations that give you far more clarity as to what's really going on. Excuse me, what's really going on at a ethylene cracker, as opposed to previously, where the news of something being on and being off, or maybe just flaring, was what sort of dominated the world of operational news. I'll give a few examples here, just some things that have happened in the last few months, some examples of how this type of quantitative news and proprietary monitoring, it can bring transparency to fundamentals and how it has changed what news means to the market in terms of operations. This example is the rumor that Dow LHC-8 in Freeport was going to be shut down for planned maintenance. There was a TCQ filing on July 18th that flares were used to minimize emissions ahead of a planned shutdown. A few days later, IR put out an alert reporting there would be a 20-day turnaround through August 13th. Now, throughout this entire time, our analysts who look at these images are very familiar with the facilities themselves, are very familiar with even how the ambient temperature can change the brightness or darkness of the imagery, and how a unit looks historically when it's operational or reduced or shut down. They monitor these images closely throughout this entire time. We did see some flaring initially, but furnace stack activity remained at normal levels the entire time. The unit was never shut. As it turns out, the filing and the alert were both erroneous, and they were retracted 1 day later. So in this case, proprietary monitoring, it cut through the noise. It showed accurately what was really going on at the Freeport cracker. However, because of that sensitivity to operational news with the tight market, with the slew of operational issues that happened just this past summer, these rumors led to a pretty significant price spike. We saw the price go from just below 63 cents a pound all the way up to over 66 cents a pound, just based on those pieces of qualitative news that came out. And as soon as those were both retracted, the market collapsed. So in this case, it was untested, not verified information that led to unnecessary volatility in the market, where the quantitative news that we provide and the transparency and fundamentals show that there was nothing going on imminently at the plant. Here's a recent example. Chevron Phillips Port Arthur was, of course, shut completely following a fire on July 7th. We were able to capture the first signs of activity at the cracker on November 7th. And we based this alert on the fact that the imagery showed the furnace stack activity and flaring and venting we had seen previously when Chevron Phillips Port Arthur had restarted their cracker. The unit actually did come back online Monday, but for several days there, because the ramp up was slow, we determined the unit was still offline until just this past weekend when the flaring stopped and the furnace stack activity returned to normal. However, in just a few days following when we alerted that the unit was finally showing signs of activity, several price reporting agencies reported that the unit was restarted. Throughout this entire time, the force majeure for ethylene deliveries by CPChem remained in place, indicating the plant had not yet restarted. So in this case, we're reporting exactly what's going on operationally at the plant without jumping to conclusions about a plant restarting until we see something in the imagery that relates back historically to what Chevron Phillips Port Arthur looks like via IR imagery when it is fully up and running. Another, I guess, benefit of our vast proprietary monitoring network, especially right now with the expansion of ethylene cracking capacity in the Gulf Coast, is that we are able to view the progress of expansion furnaces being built, and we can see when they come online. So Equistar LaPorte was shut down for a period of time. They added 2 furnaces, a total of 250 million pounds a year of capacity. There was that delay in the restart that did lead to some ethylene price volatility in June and July. And we installed an IR camera actually just in time to monitor this facility in general. And on September 25th, we were able to see that these 2 new furnaces that are here on the right began to heat up, and we're in preparatory mode. And this confirmed rumors that the furnaces would be up. So we were able to see exactly when the furnaces were in that preparatory mode, and we're able to let our subscribers know before anyone else that this capacity was soon to be coming online. We also, like I mentioned, there's operational granularity in terms of our ethylene cracker monitoring and the data we can gather. We track furnace stack utilization daily. For the crackers where we can monitor most or all of the furnace stacks, we analyze which furnace stacks are on or off, and we report that data on a daily basis. And they have historical data as well on furnace stack utilization rates for many of the crackers that we are able to monitor. And it's just an example of the furnace stacks we monitor, how that data can look when we report. When I pulled this graph, I believe this was back in October, Unit 22 at Sweeney was down for maintenance, as was Exxon Baytown. So in conclusion, those legacy good old days news delivery methods, they don't paint that clear, timely, and accurate picture of fundamentals. You don't get the accuracy, you don't get the level of detail that can tell you what's happening at a unit beyond just it being on or off. And with this unprecedented level of operational events this summer, again, it exacerbated price volatility, it created price sensitivity, and really the lack of transparency in fundamentals, it led to some unnecessary volatility and inefficiency in markets where, with our fundamental data, we were able to at least cut through some of that noise, in like the example of Dow LHC8, by showing that, in fact, there was no issue at the plant and that the reaction in the market to this rumor was unfounded because there was no operational issue for which the market to react on in the first place. So again, the ethylene cracker monitoring, it provides first-to-market, accurate, and really comprehensive fundamental news. And transparency of fundamental data, proprietary monitoring and these fundamentals, it's more than just a competitive advantage. It's about really making markets more efficient, about having clarity around supply-demand fundamentals, and supply-demand fundamentals, not rumor and conjecture, being what is the foundation of market price. With that, I'm going to turn over to Bob, who's going to go into a little bit about his outlook on NGL feedstock supply. Bob?
Thanks, Suzanne. A couple of the things what I wanted to talk about today is, one, just give everyone a brief overview of what forecasting services that Genscape is currently offering, and then we would get into our overview of ethane production and the projects that we're seeing coming online that will consume all of this production and the timing of that. And then with the ultimate question to answer is, does supply meet the future demand capacity that we see coming online? And then we'll go through the same type of outlook for propane as well. So on the next slide, there's Suzanne. One more. Okay, so what we currently offer as far as forecasting is we are providing a 5-year outlook for natural gas liquids production from gas processing, and then a look at the net refining output for the U.S. That is delivered every 6 weeks and comes with a PDF plus an Excel sheet that outlines the output from the various regions that we are forecasting. We're forecasting down to about 15 regions, and then we roll that up to a pad level. On a weekly basis, we are providing a look at ethane rejection and how that has changed from our forecast. And then we provide a monthly comparison of our forecast relative to how it is reported by the EIA. And we provide a monthly gas processing plant database, which is the production, the inlet gas, and the disposition at the tailgate of the plant for the states at which we're gathering that detailed data. And then lastly, we provide a quarterly earnings call notes. We're going through right now a combination of about 70 companies now on the midstream side plus the petrochemical side. We provide the earnings call notes plus relevant slides from their presentations. And then we're doing something very similar for Western Canada as well. On the next slide, you'll see that what we're working on, and a lot of what we're working on right now has to do with completing the supply-demand balance. So we are currently working through demand models that get us into a propane, a seasonal forecast of at least the next 2 seasons of the build and draw rates for propane, which the demand side of that's going to take a look at the petrochemical feedstock consumption, exports and imports, and then of course the seasonal heating demand that goes along with that, as well as crop drying. And then after that, we have plans to work on an ethane supply-demand balance and a butane supply-demand balance. And those would be specific to the U.S. So taking a look at ethane, our forecast currently is showing 2014 ethane production to be 135,000 barrels a day, higher than the 2013 average, and we're showing 2015 to be approximately 145,000 barrels higher on average than 2014. Of course, the majority of this growth that we are expecting is taking place in the Eagle Ford, the Permian Basin, Utica Marcellus, and the Bakken. So we've got our forecasted production from gas processing to reach 1.7 million barrels per day by the end of 2018, relative to the current levels of 1.1. Now that's just what we're forecasting to be production. That does not include our ethane rejection forecast. So on the next slide, which you can see is the total supply that is available to the market if we're in full recovery of ethane. We believe ethane rejection to be approximately 450,000 barrels per day, which includes both our view on what is economic rejection and what is infrastructure constrained. So we've got our view looks at total ethane in the natural gas stream, and then our infrastructure constrained is mainly occurring in the Bakken plays and in the Northeast, where we're not seeing significant enough takeaway on the natural gas liquid side based off of the amount of processing capacity that is being installed in those regions. We have ethane rejection peaking in late 2016. Right now that number is showing us about 575 to 600,000 barrels a day. That could be in rejection in late 2016. So with production plus our rejection estimates, we believe total ethane supply available by the end of 2018 will be pushing about 2.2 million barrels per day at that time frame. The next slide then shows the projects that have been announced to consume the amount of ethane that we show coming online. We are showing about 67% of that growth to be coming from ethylene crackers, which is about 775,000 barrels per day. We have seen so far through 2014 roughly 66,000 barrels per day of additional capacity has come online already at various facilities as they have expanded. And between now and the end of 2018, we're seeing an additional 535,000 barrels per day of capacity to consume ethane just from ethylene cracking. The remainder of that growth is export capacity, which accounts for about 425,000 barrels per day of incremental demand. We currently have 90,000 barrels a day online, looking at Mariner West and the Vantage pipeline, and then we should get middle of 15 Mariner East online, and then the big export terminal that Enterprise was announced in late 2016. And then the next slide kind of brings everything together here, and it shows you effectively that we expect ethane balances to remain oversupplied until late 2018, at which time, if all the projects are running at capacity, you would look to be balanced to short by the time we get into the middle of 2018. However, we do see that ethane becomes oversupplied again by the end of 2018 with projects, before the projects come online in the Northeast and North Dakota that could consume additional ethane at that point in time. So moving on to propane. Our growth in propane, we're showing about 170,000 barrels per day of additional growth that has occurred in 2014 versus 2013. And then we're showing an additional 158,000 barrels per day of additional growth in 2015. Again, the majority of this growth is Eagle Ford, Permian Basin, Utica, Marcellus, and the Bakken. Our forecast has got propane growing to approximately 1.4 million barrels per day by the end of 2018 versus the current levels of 1 million barrels per day. And then on the next slide, start to show the expansions that are taking place at the export terminals and the PDH units that then drive the increased consumption to consume propane. So you've got the, in fourth quarter of this year, you've got the new Targa terminal expansions coming online. I believe they've announced that they have completed a lot of the work there. And then you've got Marcus Hook's capacity coming online, or expected to come online by the end of this year, maybe into early 2015. Outside of that, then we start to get some bigger expansions to take place with Enterprise, the startup of the Nederland terminal, and Phillips 66's Freeport terminals as we move into 2015. We don't expect any PDH capacity to start to consume our propane production until we get into mid-15, and then with the majority of the projects coming online the middle of 2016 and into 2017. On the next slide, what we're showing here is the timing of the projects relative to our propane demand growth. And when we look at the terminals here, we've made some assumptions around the export terminals as to what we believe they'll be. The capacity will be related to propane versus butane. And you can see here that we were showing the market to be oversupplied this summer and moving into the first part of next year. And then we start to get the new export terminals coming online with Enterprise and Energy Transfer and the Phillips terminal that quickly takes us into a demand capacity greater than supply mode, and we see that continuing on for quite some time. We still don't have it catching up even as we get into 2018. So expansions at the export terminals are making up about 82% of the growth, which we believe is approximately 725,000 barrels, and then PDH units are accounting for the other 18%, which is 150,000 barrels per day. So that's kind of where we look at our forecast relative to everything that's coming online. So in conclusion, here we do see that we have good growth has been occurring in ethane, and we do expect that growth to moderate here in 2015 as a lot of the current expansions have subsided, and we don't expect any more demand expansions to occur until we get into 2016. And then on a ethane rejection, we do estimate that to peak around 575 to 600. Again, that's the total ethane that is in the natural gas stream. And then we do see propane production continuing to grow, and we do believe that that grows rather robustly, even because you've got a lot of capacity that's coming online that will allow your exports and your PDH to continue to consume up that additional production that's coming online. And that concludes my presentation.
All right, thanks, Bob. So we have about a 7 or 8 minutes here for questions. We've had a few come in to the question box. Once again, if you do have a question, feel free to just type it in, and I can make sure that will be addressed to our panelists. First of all, a question for you, Kathy. This is a specific one. It goes to the fact that I mentioned the Norco issues that took place last week and this week. Do we know how long Norco will be offline, and has there been any impact on the marketplace?
Well, when we're talking about how long it will be offline, that's really tough for us to say. I mean, essentially, we keep trying to check in with the plant. Of course, we're watching your system, so that's always encouraging.
Yeah, well, I guess, and just to answer that question on my end, yeah, it looks like we've seen, at least from the monitoring side, we've seen consistently elevated flaring since last week, since November 13th, and we still have 3 of the monitored furnaces offline. So, at least as of this morning, no change in terms of what we're seeing on the monitoring side for Norco.
Right. I think that in general, I certainly we could see the impact of a lot of these larger units coming back that we're out of the historic high price range, but we're still not, you're not seeing any sort of free fall. I think there's still a lingering effect of something I know, Suzanne, that you and I track in the Genscape morning report is how many pounds of ethylene are out of the market, never to be produced. So, when you look at what that cumulative effect is so far this year, this quarter, this month, there's a significant amount that's still being worked through a supply that was never able to be delivered. So there's a fundamentally constrained system. That said, something that I think is very interesting, that's also a shift in behavior, is we do, with the entrance of a lot of trading companies into the ethylene market, they hold physical storage. So there's a whole new group of participants who have ethylene, and that's also very interesting. But unlike a producer or consumer, that ethylene is made available at a particular price. So that's where a lot of that supply-demand speculation will inspire different bids or offers from that community. So, that said, Norco, I believe everybody that has the monitoring service is watching it, because it's obviously, it's not as though the plant is slammed shut or something. I believe that the fire lasted less than an hour, there were no injuries, and now it's just a question of how quickly can they get back on spec. And that's what I think we're seeing on your monitoring service.
Right, that makes a lot of sense, yeah. Well, thanks for that, Kathy. Bob, a question for you. Going back to the slide you put up when you were talking about the mismatch between propane supply and then the infrastructure being built to consume or export propane. Question about how, I guess, your assumption is that the exports of propane will run at full capacity, and then PDH would sort of be that second level. The question is, would you expect the PDH units to be sort of that first kind of area of demand ahead of the exports, and whatever's left over after what's needed to run PDH plants would then go to exports?
Well, I think what you're going to see is that it's definitely going to be based off of margins and economics. I would assume that as we go through time that the majority of the PDH units are likely to run unless we get into a propylene oversupplied market that will eat into those margins there, especially as we crack more ethane. You're going to need the additional propylene from the PDH units. So with margins staying high there, if that were to occur, we expect those to run at 100% with the balance of the available propane to be left for the export market. Right now, we are making some assumptions around what percentage we believe is likely to be exported. However, that is based off of the contracts that we are seeing out there with Enterprise, saying that they are pretty much contracted up in the near term, as well as out for the next several years, as well as Targa and others. So we don't have our exports running at a full capacity, and we think that will definitely be ARB-driven as we go into the future.
Right, I guess it all depends on who can sort of capture the best margin, right? Yeah, great, thanks, Bob. So I guess a question for you, Kathy, and Bob around PDH units and why we're seeing so many of these PDH proposed projects come up, of course, all geared to be completed sometime next year. Is the strategy with building a PDH unit, is it to supply the domestic propylene market, or will we see it make its way into additional derivative expansion projects that incorporate propylene in different ways, or is the strategy sort of twofold in that respect?
Well, I think just from the standpoint that propylene itself, it does travel around the world more easily than U.S. ethylene does. For example, U.S. propylene is traded globally, but it's most easily transported internationally as other products like polypropylene. So I think that one of the things that has, as Bob was saying, one of the effects that we've seen from our deep love affair of ethane is you're limiting your co-products, and your co-products are more expensive. Your propylene is more expensive than your ethylene now, and all that. But when you're looking on the global scale of how is that matching up against all the naphtha run crackers, that's where the PDH gives you that significant cost advantage. So I personally think that as much as there is a replacement factor that you'll be hitting in the domestic propylene market that fundamentally will bring it back into greater balance, it ultimately is serving the global downstream markets. That's, again, just my personal opinion. Bob, you may have a different one.
No, I completely agree with that, and I don't know that I have anything to add to that, actually.
That was a perfect answer. There you go. All right, I guess we have time now for any more, if you have any more questions. I believe our marketing department is going to be sending around copies of the slide deck, and our contact information is in there, so you can reach us directly. With that, I want to thank our panelists today for presenting, and thank you everyone for joining us. Have a great afternoon.
Thanks.